We, as the lenders, are repaid first. And I think that is the beauty about being a lender. It's also very passive, also very diversified, and it's cash flowing within 45 days of the investment.
Ruben, thank you for joining me today.
Thank you so much for having me. It's a pleasure to be here.
It's good to see you. I'm excited to talk about your story. I think you've got experience on the real estate side of things, on the lending side of things. Want to hear about how this all happened. But welcome to the show.
Thank you so much, man. I know we were trying to coordinate this for some time, so it's a pleasure to finally be here.
I like the background. I think you're in New York. Is that right? What part of New York?
Queens, New York.
Awesome.
Go Queens.
How's Queens doing these days? So, I know Queens said it was doing great for a period of time. Yeah. I don't know what happened after COVID. Yeah. How's Queens overall?
No, look, I think Queens is great. I wasn't born here. I was born in Turkmenistan, but I was raised in Queens, New York. I don't know anything else other than Queens. But, I think there's a lot of change in politics in New York as a whole. And I think that there's a lot of things that need to be changed again. For example, defunding the police, in my opinion, I think is the most horrific and horrible thing that someone can do. Especially, I think a few weeks ago, I was listening to some kind of podcast and there was someone saying that, all the protesters that were actually protesting to defund the police, someone came in there, started, yelling and getting a little violent. And guess what? All the protesters who were yelling at the top of their lungs to defund the police were also yelling, saying, call the police, right? So not trying to get political, but I think there's a lot of change that needs to come into the New York state of New York and really kind of bring things right back to where they were a few years back.
No, it makes a lot of sense. I think that's a great example, Be careful what you wish for, right? So currently you're running We Lend Fund, but you didn't start off in that world. Why don't you give me the history of kind of where you started and your current business?
Sure. So we immigrated to the U.S. in the 90s from Turkmenistan. Very small village, very humble beginnings at times, living with 15 people, 16 people with a one-bedroom, one-bathroom apartment. My father came here with 6 mouths to feed and only about $1,000 in his pocket. And he had to pay, I think, $800 for the first months of rent. So you can imagine bringing him to $200 in net worth. We went to the public education system. I ultimately decided that, school was not for me, dropped out of high school, went into the world of business, got my ass handed to me. And I realized that school is very important. So went back, got my GED, went to St. John's University here in Queens, New York, ultimately went to law school and graduated top of my class. And I would do it all over again, although I don't practice today. And the reason why I say that is because law school really trains you to see the downside before you see the upside. And today, being a steward of other people's money, being a fiduciary, seeing the downside before you see the upside has brought a lot of benefit to us, right? And that's what attracted us to the lending space. So essentially, we're lending to real estate operators and investors nationwide, predominantly, I would say in the northeast of New York, New Jersey, Connecticut, Massachusetts, and so on. And we've been doing that for about, I want to say 7 years now. Since the launch, we've originated about $700 million across about 1,400 loans with zero principal loss. Something that you can't really find in other investment vehicles. There's a lot of investors taking on capital that have been investing into other deals. And, things do happen. But I think the nature of being a debt player, being a debt provider, you're in the safest part of the capital stack. You have a lot of subordinate capital that is lost at first before you actually start losing any principal. And I think just the nature of our business has really, really been a credit to why we have never lost any of our investor money.
We're very familiar with hard money lenders. We're Allied Title, obviously. We have a hard money lender. It's an investor. We work with hard money lenders all on the East Coast. Very impressive that you haven't lost the principal. I've seen there's different types of companies, right? There's some hard money lenders that will do anything and everything. There's other people that treat it as if it's their own money, even if it's not. It sounds like that's what you've done to have that kind of result.
The money that we've raised, it is all intimate capital. It's friends and family, right? People that I grew up with, people that my kids play with, their kids. We go to the same temple. We pray together. We live together. So every penny that we deploy, although majority of the capital today grown in size is not our capital, we're personally invested into the fund. We're always aligned with our investors, but every penny we deploy it as though it's our own money. And I think that right there, having the founders and head of underwriting, as an example, Moses and Solomon, who's head of originations, are also personally invested. Having that alignment of interest with our investors, I think is great.
It makes a lot of sense. And you mentioned the safest part of the capital stack. For those out there that are wondering what that means, I assume it's first deed of trust, but why don't you explain kind of what that means and how it's protected?
Of course. So we are always always first lien recorded on the properties and always collateralized by real estate. But most importantly, we're also personally guaranteed by the operators. And what that means is that when you are actually a first lien lender on a property, before anyone takes out their hard-earned equity, their hard-earned money, you as a lender are repaid first. So you're the last one into the deal, but you're the first one out. Use an example. I have a mortgage on my property. Tomorrow, if I decide to sell my property, before I take out my blood, sweat, and tears, I got to pay off my bank. And that's the beauty about being a lender, right? Bank always wins. You're the last one into the deal, but the first one out. So in addition, you also have a lot of subordinate capital. So what happens is that our investors, our borrowers rather, when they borrow from us, they always have to bring money, skin to the game, right?
Mhm.
They have to bring money to the table. And usually it's about 20 to 30% of equity into the deal the day of the closing. In addition to that, they have closing costs and they have to start the construction. So they're usually between 30, 40% invested into the deal. Some of that 30, 40% of equity is actually other investor capital. So what that means is that before anyone takes that 30% out of the deal,
Mhm.
40% out of the deal, we as the lenders are repaid first. And I think that is the beauty about being a lender. It's also very passive, also very diversified, and it's cash flowing within 45 days of the investment.
What do rates look like? I know it all depends on the property.
Yeah.
What are kind of averages on hard money and private money currently?
It really depends on the size of the loan. It depends on the operator. I mean, you said it well. I think today we're landing anywhere between 10 and 11.5%. Again, depending on the leverage, depending on the borrower. We're very driven to work with sponsors that are continuously sending us business. There are things that we'll do for a borrower, a returning borrower that sent us multiple deals in the past that we would not do for a new borrower that came to us through the doors. Regardless of how hard they yell as far as their experience and how much business they're going to send us in the future, we're relationship driven, right?
Sure.
So if you're sending us business, if you're committed to us as a borrower, we're going to be committed to you as lenders. We'll work with you, right? Things happen, and we are always trying to work with borrowers that are continuously sending us business and are committed to us. And today, it's a testament to who we are, right? We have about 70% of our loans with returning borrowers, repeated business. It comes to tell you and shows you that our borrowers appreciate us just as much as we appreciate them.
You're creating a relationship. You talked about that. That's truly the best way to know if your loan is going to be. Let's be honest, right? I mean, I talked to our investor, Brian Anything, Congressional Capital, and he always talks about. He's like, I know from my relationship whether the deal's going to go well or not. I know what the loan's going to be paid back. Right? There's certain people that always are true to their word, and you're creating that relationship, and that's the biggest part of this.
And yeah, I mean, look, in our space, you take people's word on things, but you also verify it, right? Today, what we do is we do a background search on every single borrower. We also pull their credit. And the question sometimes is asked, Ruben, why do you need to do a background search on me or a credit search? I'm your friend since childhood, or I'm your neighbor, you know me. And the answer is very simple. I mean, look, there's a lot of things that we find through background searches, right? We always look to see if there's any bankruptcies, any foreclosures, any type of defaults, any type of major litigation or criminal activity. That to us are red flags. Those alarm borrowers that we would not lend to. In addition, we pull their credit because, look, a lot of borrowers today, our majority of our clients, they're buying, fixing, and flipping. They're selling. But let's just say for whatever reason, they decide to keep the property, or they can't sell the property at the profit margins that they need to be able to hit for their investors. So they'll keep the property. For us, we want to make sure that they have good credit to be able to take out our loan, right? So it's one thing to give people money, but it's another thing to actually get it back.
That's a good point.
Doing all that due diligence, making sure that we're first lien positions, collateralized by real estate and personally guaranteed by the borrowers, ensures us and gives us the security and the insurance to make sure that we are repaid.
Ruben, you present well. I trust you with my money already. I'll tell you that.
I'll send you my wiring instructions after this.
There you go. One thing you said earlier, it's funny you brought it up because, so I wasn't good in school either. I specifically had this conversation where I go, I think a lot of times things go a little bit too far or whatever. One thing you've heard a lot in the news is that, you don't need to go to college anymore. And I was like, I understand to a degree. There might be some trade skills or whatever. A good friend of mine started a landscaping business, never went to college, has done very well. There might be certain businesses where it does allow it. However, even ourselves as a title company that not many people know about, I don't know if we've ever hired anyone that doesn't have a college degree. There's a lot of jobs out there that do require that education. And not only do you get the education, but someone that goes to college gets an amazing life experience.
Exactly.
They get their own social experience. So I'm glad you brought that up because I think that's something that we do see the value, and we're always going to see the value in education.
I agree with you. Look, when I dropped out of high school, I was about 16 years old, and I thought I knew everything. I thought I had the answer to the world, right? And I went to work for a mortgage brokerage shop, basically producing loans, reaching out to people that want to refinance their loans. I mean, this was around 2006, 7, 8. And, I went from making hypothetically 120,000 a year as a teenager to probably making like 15,000, right? So my earnings dropped significantly. And I think the conversation that my father and I had at that time was, son, you clearly have done it. You've succeeded. You've proved to yourself that you can actually survive in the business world, and things happen. But what's going to happen tomorrow if you have a family and kids and, you have those fluctuations? You need to have some type of insurance. So for me, when I went back to school, I looked at it more of, hey, I'm just going to have security. I'm going to have that subordinate capital, right, as I have today, to be able to provide the security and the safety for my investors. For my security and my safety for my future was to have an education. Now, that was my going in thought process. Going out, I realized, education is important. And the reason why I think of it that way is, I don't know if you have a coach today or not for your business. I have a coach. We hired a coach to be able to coach us. If you look at the major, biggest, and baddest athletes out there, they all have coaches.
Right.
Why don't we business people have coaches, right? And that's why I brought on a coach. And I feel like the education system, colleges, high schools, and what have you, is your teachers are your coaches to the real world, right? Now, the content that you learn, is it the best type of content? Some of the things that I see my kids learning today, I'm like, shoot, I wish, they never were exposed to it at this age. But you know what? It prepares you, because now when you have deadlines for an essay, you have deadlines for a presentation, you have to get in front of an audience, all your peers and students to speak in front of 30, 40 people and present something. You're doing that day in, day out, right? You and I had to prepare for this podcast. We had to make sure the content is right. Your coaches, your teachers are the ones preparing you for the game. And the game is real. That's all I can say. It is real.
Yeah. I think the other thing too, I remember, like, let's say when I was waiting tables in high school and, I made $200 tonight. Like, that's so much money. Or that bartender made 300 or 400. Like, man, I could make so much money if I do this. And I remember my business partner's dad. It's weird how you remember certain things. He goes, my average rate as an attorney is $550 an hour. So he's like, so education is important. And no matter how many times you go out there and make drinks or whatever, you just can't compete. And on top of that, when you get sick, you don't get paid that day. You don't have, when you're bartending or whatever, you don't have 3 weeks paid vacation, which is a big thing that people don't also understand. And so a lot of times to get those jobs, you have to have that education. You have to have that college, right?
You hit it on the head. Look, I mean, there's also a loss of opportunity, right? If I didn't have my law degree, I think there were a lot of doors that would not be open for me today as they are today, right? And I think having that layer of competition, advantage over your competition, is super, super important. There's some things that I do, and some of my friends ask me, like, Ruben, why are you doing this? And I said, look, if I can get a 2% advantage over my competition, let's just say this what I'm doing right now is just going to give me a 2% advantage. Wouldn't you take that all day? And the answer is absolutely, right? 2% is better than 0%. So I think, with an education, with some type of degree that actually means something, that is valued somewhere, right? Now, I can't say that I don't have friends that are not successful,
sure,
and they have no education.
Yeah, no, I appreciate, and you did something that's really hard. So or let's say you're making 6 figures at a young age, and you're like, you know what, this isn't going to make me the most successful long term. I'm going to go back and pay X amount of tens of thousands a year. I had a similar story. I was at PricewaterhouseCoopers right out of college. It was a marketing job in the tax division. I was supposed to make tax sound interesting. I don't know how I got the job, but it was not the most fun job. I was like, I have to enjoy what I'm doing. So moved to San Diego and started a sport and social club. I went from making $45,000 down to $18,000 a year. And I made, for the next 5 years, I didn't make more than $30,000 a year. But there was an end game to it. And that's hard for young people too, to look beyond 5 years down the road and 10 years. But now that we're older gentlemen, like ourselves, like, it's amazing how quick 5 years goes, right? Or 4 years for college.
Unbelievable. It's unbelievable. We were talking about that. It's so funny you said that. We were talking about that this Shabbos, about the fact that my son, he's already 9.5 years old. And, 4 years from now, it's going to be his bar mitzvah.
Yep.
And my sister's like, it's a long way coming. I'm like, actually, I don't think it is. 4 years now is like, it's here. I got to start thinking about it and preparing for it. So you're right. 4 years or 5 years is basically right around the corner, especially when you get to the specific age of 25 or over, 30 or over. I mean, things time just starts flying.
Flies, man. So tell me a little bit about what you were doing before you got into your current business on the real estate stuff.
Yeah. So we were buying, selling, flipping, developing real estate for a few years. suburbs, predominantly New York, Queens, Brooklyn, Bronx area. And, a little after law school, I remember I was about to start studying for the bar exam. I got a call from Leonard Brozit. He was managing and operating the Pitbull Conference. Today, it's called the National Private Lending Association, NPLA. I actually sit on the committee of it. So it just shows you how much things have developed and grown. But he called me and said, look, I see that you're an active real estate investor and you got to come to this blue chip hard money lending event. All the hard money lenders are here. You got to come here to be able to find a cheaper source of liquidity for the deal that you're buying. What are you paying today to your hard money lender? At that time, I was paying 15%. So I was like, you know what? Why not? That's right before I started studying for the bar. I was like, I need a vacation. So we flew out to Arizona and we went into this conference as private investors and developers. We walked out as private lenders. We've never looked back since.
Awesome.
But, prior to launching, we were buying, selling, flipping, developing. We were exactly the borrower, the clients that we're catering to today, day
Sure.
in, day out, night out, is exactly who we were in the past. So I think that set of experiences, those deals that we were getting ourselves into, knowing exactly what the pitfalls are, how the business operates, what it is to take a property, fix it and flip it, or what it is to take a property, fix it and hold it. I think having those experiences and ultimately being able to provide that same service that you were expecting from your hard money lender then to your borrowers today, I think is critical in what sets We Lend apart from many other private hard money lenders. Nothing to say bad against your partner. I'm sure your partner is just as good, but at the end of the day, that's what really sets apart We Lend from other private.
He's in a different area. Don't worry about it. But I will also say, I think you and him have something that I would look for in a hard money lender, and I've actually used a hard money lender in the past, is smart money. Is someone that knows the business, that's an actual consultant. You're not charging for that. There are coaches out there that are charging for how to flip houses and stuff like that. I'm sure as part of your money, you're able to give that strategic consulting advice, right?
Totally. Our borrower's win is our win, right? The more successful our borrower is, the more he's going to borrow from us, but also the higher chances of him actually repaying our loan, which is critical for us. So, today, especially to like borrowers that are just kind of starting out, they're probably in a second or third flip, we provide them whatever guidance we can. And I think to a lot of inexperienced borrowers who are looking into deals, it's good to be optimistic, and you should be, but you should also be realistic, right? And sometimes you're fed information that is not accurate. So I think we as hard money lenders, we provide them that guidance and that layer of review that they probably don't have the experience to do. So, for example, a borrower will call us and say, look, I'm going to put $100,000 into the renovation. We look at the property, we look at the square footage, and we look at the area, right? We'll tell you, look, the kitchen alone is going to cost you $30,000, $40,000, because if you don't put a kitchen that high end, you're probably not going to sell at the resale property value that you're seeing. So I think that type of guidance, in addition, we do an appraisal on every single property. No matter how well I know the neighborhood, I do an appraisal on the property. So I think, having that layer of review from an appraiser also gives the borrowers certainty of execution, because now they know, okay, that renovation is not going to cost me $100,000. It's going to cost me $175,000. And on top of all that, my property resale value is not going to be $1 million. It's going to be $800,000. Let me go back there and renegotiate the price. And guess what? When they do, they're always winning versus losing. And that's the guidance and the coaching that we as lenders provide to many of our borrowers today.
I love it. How did you end up finding your coach that you hired for yourself?
Very good question. So he is a dear friend for many, many years, and he actually retired from a very large private lender. And him and I were sitting on a committee at the National Private Lending Association. And as soon as he retired, I called him, with this question of, come join We Lend. Forget about retirement. What are you doing retiring? Come join We Lend. And he said, look, I'm not looking to work 9 to 5 anymore, or 9 to 9, the way in which he was working. I want to just chill, relax, play golf, be with my wife, be with my kids. But what I am doing is coaching. So I think just being able to keep my ears to the ground and seeing, how the landscaping is working, who's retiring, who's not, who would be a benefit, is really the way I found the coach. And I can tell you right now, I don't know how I was operating my business without a coach. I think it's critical, because there comes a point where either you're just brilliant, right? There's some people who they can do things without anyone, right? I'm just not that person, right? They're either really brilliant, they can just run through things on their own. But I think most of the people, even the top CEOs of Fortune 500 companies, they always have some type of sounding board, someone that they can consult with, someone that they can speak with, and so on. It's great to have friends that are also successful. I have a lot of very good friends that are kind of battling the same kind of fights that I'm battling every single day, as far as growth and scale and so on. But I think having someone that's a lot more seasoned and experienced to give you that guidance is super, super important.
And it sounds like you were, in a sense, kind of looking for a mentor, someone that had been in the industry. And I think that's something that
Exactly.
someone should be thinking about. I've been a couple of networking groups, YPO and Tiger 21, and I'm
Yeah.
always looking for people that have done what I'm looking to do in real estate. And I will proactively reach out to them and, hey, how can I help you? I'd love to get advice from you. And it
Yep.
really is a game changer. These people that have already done what you're trying to accomplish, they can speed up that process significantly.
Exactly. We have calls on a monthly basis. And then also we have our annual and semi-annual meetings. And we just passed our semi-annual meeting a couple of weeks ago. And I can tell you the framework that we came out of there was a 2-day meeting that we had all hands on. The framework that me and my partners came out of that meeting, a 2-day meeting, really is setting the next 6 months for us. Right. And I think that is super, super critical. Again, he's been there, he's done that, and he's just so many years ahead of you. Why not pay for it to be able to help you leap forward that many years?
Sure. No, it's funny because when you said coaching, I was like, yeah, no, I don't have a coach, but that's a lie because I have informal
Mentor.
mentors. I
Yeah.
definitely do.
Yeah.
So we've got a section on the show called Rapid Fire Questions. Monthly distributions or long-term compounding.
Long-term compounding, no doubt about it. I mean, look, at the end of the day, I think Warren Buffett said it well that, compounding is really the mother of all evil or greatness, right? And I think for us today, most of our borrowers, I would say I think it's like almost a 50-50 split where most of our borrowers are taking on monthly distributions versus some borrowers are actually reinvesting the distribution. And what we're learning is that those investors who are reinvesting their distributions are actually on track to double their money within about 5 years versus the investors who are actually just reinvesting or cashing their distribution. Always, always reinvest and enjoy the power of compounding.
And forced savings works well for someone like me who's a bad saver. It's another value of keeping it in the deal. What's one thing investors misunderstand about private lending?
I think one of the biggest issues that many of our borrowers have is we want to make sure, and we're always rooting for our investors' success, but we are not essentially their partner. Right? We are their lender. We give them the guidance. We give them the support. And I think having that top of mind of knowing and using your hard money lender when you need them, how you need them is super, super important. And many of our investors are not using today. So I think the key difference here is making sure that you're using your hard money lender in the right method, but also to a new investor who's just entering the space, be cautious, right? Whoever's flipping that property over to you, they have an incentive to flip property to you, right? They want to be in and out of a deal. So cross all your T's, dot all your I's, and make sure you're using your private lender to be able to make sure the deal makes sense. Now, look, when I was buying, selling, flipping, and developing, there are times where I could have bought a deal all cash. I didn't need a hard money lender. But the reason why I used a hard money lender was because, again, he gave me that extra lens of review and analysis that helped me win. And that's the most important thing.
That makes sense. Within New York City, what's the best area for you if you were to be do developments, in your opinion, currently?
In New York City, I mean, look, my backyard is Queens. That's where I was raised. So I think there's a lot of opportunity here in Queens. But I think the challenge that we have in New York City, and I swear it's not because I'm trying to run for some type of office. Yeah. I'm not. But I think there's so much opportunity to be able to do the right thing in New York City. And I think that today, most of our political leaders, they're missing that specific point of doing the right thing, not only for one part of New York, but other parts as well. And if you look today, there's a lot of people that are actually leaving New York for the state of Florida, as an example, or California for the state of Florida, for the state of Texas. And the reason why that's happening is because Texas and Florida, they know how to make sure to have a balancing act for both investors and tenants, right? As an example, it's not just all about tenants. There are mom and pop landlords that are barely surviving to pay their rent or their mortgages on their properties. And being able to allow a tenant to stay in a property for 5 years without paying a penny in rent, how's that helping the landlord who's just trying to survive and be able to retire off of something? As much as I love New York, I think there has to be a lot of political change before a lot of investments start pouring back in the way in which it used to.
Yeah, no, I think you bring up a great point too. So like in DC, we have a similar issue. It's taking at least, it's taking up to 16 months and more to get people out that are not paying their rent. And so what people are doing is the law allows this and people do what the law allows, and people are signing leases and just not planning on paying because they know it'll take over a year to pay. So like, how is that a good thing? There does need to be common sense. There's some of these things, like you said, where yes, we want to protect the tenants to a degree, but these people are taking advantage of the system and it's not good for anyone. And like you said, these landlords, you always hear the news of landlords are bad that, or, whatever. Slumlords, you hear that a lot. But like you said, a lot of times there are these people that are making investments in properties and they need to pay the bank and they need to pay, they're not bad people, right? And so that's unfortunate, kind of similar to what we talked about earlier, but a misunderstanding. I think landlords are misunderstood.
There should be a balancing act for both landlords and tenants.
All right. No, I think we got that point down. But like you said, there needs to be a balance there. What's your go-to philosophy during a tough real estate cycle?
Keep your head down. Remember the long-term vision. Make sure that your investors are taken care of and your debts are paid. I think for a lot of investors who are trying to really kind of enter the space and take over the space, right, in terms of developing or what have you, raise enough equity. Don't be shy, right? Raise enough equity. Mm-hmm. Keep your debt service fair, not high, not aggressive. I know that, when you take on aggressive debt, it yields a much greater return for your equity investors. But I think it also brings on too much risk for many of your investors.
That's a great point. Last question for you. What's the main reason people should invest in your fund?
I think there's a number of reasons, but I think the main reason really is the safety involved with being a lender versus a landlord, right? I think being a lender, you're the last one into the deal, but you're the first one out. In addition to that, our debt fund, it is liquid. What that basically means is that you're not going to be tied into a deal for the next 3 to 5 years. You're able to pull out your investment within 12 months. Also, we're able to capture diversification. When you're investing into our debt fund, your money is going into a number of different deals, to a number of different borrowers, a number of different asset classes, and a number of different geolocations. It's not going into one single deal. And I think that diversification is super important, but also it is cash flowing. You're getting monthly mail check money versus having to deal with tenants, broken toilets, midnight calls. You're really receiving a passive investment with a first lien position collateralized by real estate, but most importantly, first lien guaranteed by high net worth, sophisticated borrowers.
Being liquid is something I've not heard before. The fact that it's a fund, you're investing in multiple properties. I assume you have other investors coming in so people get their money back. So that's a great and pretty rare advantage I've heard on the hard money lending side.
Totally. I mean, look, we're in the business of being liquid. And if we're not liquid, we're not a business, right? So, if our investor calls us and asks for a redemption, it's something that we can actually honor fairly.
Awesome. Ruben, it's great having you on. You're very well spoken, by the way. You should get into public speaking, maybe. I don't know. Really appreciate the time. Thanks so much. If people are interested in working with you, what's the best way for them to get in touch with you?
Call me on my cell directly, 917-815-1222. Email me at Ruben at We Lend LLC. They could also reach us on our website, www.welendllc.com, and all social media platforms, including TikTok. Our handle there is We Lend LLC.
Love it, man. Hey, thanks so much for the time. Look forward to staying in touch.
Same here. Appreciate it, man.